Most people think cryptocurrency is just Bitcoin, but they are completely wrong. But did you know there are actually 10 completely different types of cryptocurrency? Each one changing finance in a completely different way. By the end of this video, you will know exactly which one matters most. Let's get into it. Bitcoin. Bitcoin is the original cryptocurrency, created in 2009 by an anonymous person or group using the name Satoshi Nakamoto, and remains the most valuable, most recognized, and most widely held digital asset in the world today. Bitcoin solved a problem that had challenged computer scientists for decades: how to create digital money that cannot be copied, counterfeited, or controlled by any single authority, using blockchain technology to create a permanent public record of every transaction that anyone can verify but nobody can alter. The fixed maximum supply of 21 million Bitcoin is its most important economic characteristic. Unlike traditional currencies that governments can print in unlimited quantities, no more Bitcoin can ever be created beyond this hard limit, making it mathematically resistant to the inflation that erodes the value of paper money over time. Major institutional investors, including MicroStrategy and Tesla, have purchased Bitcoin as a treasury reserve asset, alongside sovereign wealth funds and national governments, marking a significant evolution from its early reputation as a niche technology experiment to a recognized store of value asset class. The Bitcoin halving event, which occurs approximately every 4 years and cuts the rate of new Bitcoin creation in half, has historically preceded major price appreciation cycles, as reduced new supply against steady or growing demand creates upward price pressure that have defined Bitcoin's cyclical market behavior. Ethereum. Ethereum expanded the concept of cryptocurrency far beyond simple money transfer, introducing programmable smart contracts that automatically execute the terms of agreements when specified conditions are met, without requiring any trusted intermediary to oversee the transaction. Vitalik Buterin proposed Ethereum in 2013 at just 19 years old, envisioning a blockchain platform that developers could build applications on, transforming blockchain from a single-purpose payment network into a programmable infrastructure layer for decentralized applications of virtually unlimited variety. The Ethereum network hosts thousands of decentralized applications, including decentralized exchanges, lending platforms, NFT marketplaces, and gaming applications, all running on a shared infrastructure where smart contracts execute automatically and transparently without any company controlling the outcome. Ethereum's transition from proof-of-work to proof-of-stake consensus in 2022, known as the merge, reduced the network's energy consumption by approximately 99%, addressing one of the most significant environmental criticisms of cryptocurrency, while maintaining the security and decentralization that makes the network valuable. Ether, the native cryptocurrency of Ethereum, functions as the fuel that powers transactions and smart contract execution on the network, with every operation consuming a quantity of Ether as a fee, creating consistent demand for the asset from anyone using the platform. Stablecoin. Stablecoins are cryptocurrencies specifically designed to maintain a consistent value, typically pegged to the US dollar, providing the technological benefits of cryptocurrency, including fast borderless transfer and programmability, without the extreme price volatility that makes other cryptocurrencies impractical for everyday transactions. Tether and USD Coin are the dominant dollar-pegged stablecoins, each unit backed by reserves of traditional financial financial assets held by the issuing company, maintaining their one-to-one dollar peg by allowing users to redeem stablecoins for actual dollars and mint new stablecoins by depositing dollars. Decentralized stablecoins, including DAI, use smart contracts and cryptocurrency collateral rather than company-held reserves to maintain their price stability, allowing dollar-equivalent value transfer without any centralized company controlling the reserves backing the currency. The practical utility of stablecoins in the cryptocurrency ecosystem is enormous. Traders use them to hold value between cryptocurrency investments without converting back to traditional currency. Businesses use them for international payments that settle in minutes rather than days, and decentralized finance platforms use them as the primary unit of account for lending and borrowing. The collapse of Terra UST in 2022, an algorithmic stablecoin that lost its dollar peg catastrophically, erased tens of billions of dollars of value within days, demonstrating the critical importance of robust backing mechanisms and highlighting the difference between well-collateralized stablecoins and algorithmic designs that depend on market incentives to maintain their pegs. DeFi Token. Decentralized finance tokens are the native cryptocurrencies of financial applications built on blockchain networks, representing ownership, governance rights, or fee-sharing entitlements within platforms that provide lending, borrowing, trading, and yield-generating services without any bank or financial institution involved. Uniswap's UNI token, AAVE's AAVE token, and Compound's Comp token are among the most established DeFi tokens, each representing a stake in a protocol that collectively manages billions of dollars of financial activity through smart contracts rather than human employees or corporate structures. Yield farming emerged as a distinctive DeFi behavior, where users move cryptocurrency between different DeFi protocols to optimize the interest rates and token rewards they earn, with sophisticated participants managing complex strategies across multiple platforms simultaneously to maximize returns. The total value locked in DeFi protocols, measuring the total cryptocurrency deposited into smart contracts powering decentralized financial services, reached over $100 billion at peak, demonstrating the scale of financial activity that had migrated from traditional institutions to decentralized alternatives. The risks of DeFi participation are substantial and distinct from traditional finance. Smart contract vulnerabilities can be exploited by hackers to drain protocol funds. Token prices are highly volatile, and the absence of regulatory protection means losses from hacks or protocol failures have no insurance or legal recourse available to affected users. NFT. Non-fungible tokens are unique digital assets recorded on a blockchain that prove ownership and authenticity of a specific digital item, whether digital artwork, music, video clips, virtual real estate, or any other digital content, with each NFT being one of a kind rather than interchangeable with other tokens. The NFT market reached an extraordinary peak in 2021 when Beeple's digital artwork sold at Christie's auction house for $69 million, bringing global mainstream attention to the concept and triggering a speculative boom that saw millions of digital images, videos, and collectibles traded as NFTs at prices that proved difficult to sustain. NBA Top Shot brought NFTs to sports fans, creating a platform where officially licensed video highlights of basketball moments could be bought, sold, and collected as digital trading cards, introducing the concept to mainstream sports audiences who might never engage with traditional cryptocurrency. The utility of NFTs beyond pure speculation has been demonstrated in gaming, where unique in-game items, characters, and virtual land owned as NFTs can be traded between players outside the game itself, creating player-owned economies where rare items hold genuine monetary value. The NFT market experienced a dramatic contraction from its 2021 peak, with trading volumes falling over 95% as speculative enthusiasm faded and the challenge of establishing lasting value for digital collectibles became apparent, leaving a much smaller but more focused market oriented around genuine utility and established collections. Privacy coin. Privacy coins are cryptocurrencies specifically designed to provide transaction anonymity, hiding the sender, recipient, and transaction amount from public view on the blockchain, contrasting with Bitcoin and most other cryptocurrencies whose transactions are permanently publicly visible. Monero is the most widely used privacy coin, using advanced cryptographic techniques including ring signatures, stealth addresses, and confidential transactions to make all transactions private by default, making it impossible for blockchain analysts to determine transaction details even with full access to the blockchain. Zcash offers an optional privacy model, allowing users to choose between transparent transactions visible on the blockchain and shielded transactions that hide details using zero-knowledge proof cryptography, giving users flexibility to maintain privacy selectively rather than universally. The legitimate uses of privacy coins are substantial. Individuals in countries with authoritarian governments use them for financial privacy. Businesses use them to protect commercially sensitive transaction information from competitors, and privacy advocates use them as a matter of principle regarding financial surveillance. Regulatory pressure on privacy coins has intensified significantly, with several major cryptocurrency exchanges delisting Monero and other privacy coins in response to regulatory concerns about their use for money laundering and sanctions evasion, creating access challenges for users who value transaction privacy for entirely legitimate reasons. Utility token. Utility tokens are cryptocurrencies that provide access to a specific product or service within a defined platform or ecosystem, functioning more like digital vouchers or access passes than investment assets, designed to be used rather than simply held for appreciation. Filecoin tokens are used to pay for decentralized cloud storage on the Filecoin network, a marketplace where individuals earn tokens by renting their unused hard drive space to the network, and users spend tokens to store files across thousands of distributed computers worldwide. Basic Attention Token, used within the Brave browser ecosystem, rewards users with tokens for viewing privacy-respecting advertisements, creating a new advertising model where users, rather than platforms, capture the value of their attention, while advertisers reach genuinely interested audiences. Chainlink tokens power a decentralized Oracle network that connects smart contracts with real-world data, paying node operators who provide accurate price feeds, weather data, sports results, and other external information that smart contracts need to execute their terms based on real-world conditions. The challenge of utility token investment is the frequent misalignment between token price and actual usage demand. Many utility tokens were sold as investments during the initial coin offering boom of 2017, despite their designed purpose as access mechanisms, creating confusion between speculative value and genuine utility value that has complicated both investor returns and regulatory classification. Central Bank Digital Currencies. Central bank digital currencies are government-issued digital versions of national currencies designed and controlled by central banks to provide the convenience of cryptocurrency, including instant settlement and programmability, while maintaining the stability, legal status, and regulatory backing of traditional government money. China's digital yuan is the most advanced major economy CBDC implementation, with millions of Chinese citizens using it for everyday transactions through a government-distributed digital wallet application, providing the Chinese government with unprecedented visibility into citizen spending patterns while offering convenient digital payment functionality. The Bahamas' Sand Dollar and Nigeria's e-Naira represent developing economy CBDC implementations, motivated by the desire to extend financial services to populations without traditional banking access, rather than the monetary policy motivations that drive developed economy CBDC development. The privacy implications of CBDCs are a significant source of public concern in democratic countries. A government-issued digital currency could theoretically allow authorities to monitor every financial transaction its citizens make, freeze funds instantly, or program money to expire or be usable only for approved purposes. The United States Federal Reserve has studied a digital dollar extensively without committing to implementation, navigating the tension between the efficiency and financial inclusion benefits that proponents argue a digital dollar would provide, and the privacy, banking system disruption, and monetary policy risks that critics raise against CBDC implementation. Gaming token. Gaming tokens are cryptocurrencies integrated into video game ecosystems, allowing players to truly own in-game assets, earn cryptocurrency through gameplay, trade items with other players on open markets, and participate in the governance and economics of virtual worlds they inhabit. Axie Infinity pioneered the play-to-earn gaming model, with players in countries including the Philippines earning meaningful income by playing the game, breeding and battling NFT creatures, and earning the game's cryptocurrency tokens that could be exchanged for traditional money. The Sandbox and Decentraland are virtual world platforms where players can purchase virtual land as NFTs, build experiences on their land, and earn tokens through participation, creating player-owned digital economies where virtual real estate commands real monetary value. The play-to-earn model faced significant sustainability challenges, as the number of new players required to support existing player earnings through token purchases proved difficult to maintain indefinitely, creating economic structures that eventually collapsed when player growth slowed. The next evolution of blockchain gaming focuses on player ownership rather than earning, games where players genuinely own their items and characters as NFTs they can use across multiple games or sell freely without necessarily requiring economic models that depend on continuous new player recruitment to sustain token value. Meme coin. Meme coins are cryptocurrencies that originate from internet humor and social media culture rather than technological innovation, deriving their value almost entirely from community enthusiasm, celebrity attention, and viral momentum, rather than any underlying utility or technological differentiation. Dogecoin was created in 2013 as a joke based on the popular Shiba Inu dog meme, never intended as a serious financial instrument, but adopted by an enthusiastic community that embraced its humorous origins, eventually reaching a market capitalization of $80 billion during 2021 after repeated promotion by Elon Musk on social media. Shiba Inu launched in 2020 as a self-described Dogecoin killer, creating a token with an astronomical initial supply of 1 quadrillion coins and building a community of passionate supporters who drove its price to extraordinary levels through coordinated social media promotion and exchange listing campaigns. The investment risk profile of meme coins is extreme even by cryptocurrency standards. Their value is driven almost entirely by social sentiment that can shift instantly, with no fundamental business, technology, or utility to provide price support when enthusiasm fades. Despite their origins in humor and speculation, meme coins have demonstrated a genuine cultural phenomenon. Their communities create real social bonds, charitable initiatives, and enthusiastic participation that traditional financial assets never generate, suggesting that the entertainment and community value of meme coins may represent a legitimate, if unconventional, form of value creation. That covers 10 cryptocurrency types that changed finance forever. If this video helped you understand something new, make sure you subscribe to ByteSimple right now, because next week we are breaking down 10 investment types that build real wealth. And trust me, you do not want to miss that one. Drop a comment below and tell us which cryptocurrency type surprised you the most. See you in the next one.